Hey, what's up, good people? My wife gave me permission to shoot this one. We're heading to the airport. The FOMC meeting, the Fed, we're just going to listen to what the rate hike is. I'm going to turn this around really quick, and then we're going to post this immediately, okay? Let's listen.
We are in a complicated time, both in terms of the economy, in terms of geopolitics, and the rest. We've got about 10 seconds now until we can go to Steve Leisman for the news, and let's do that right now.
The Federal Reserve raising interest rates by 0.75 of a percentage point to a new range of 3 and 3.25%, the highest rate since early 2008. The Fed saying that ongoing increases will likely be appropriate in the funds rate. The Fed also saying inflation remains elevated. It sharply raised the median forecast of a Federal Reserve official, sharply raising the outlook for the funds rate for this year to 4.4% from 3.4%, so a full percentage point. By the way, that is a little higher than the market was going into this meeting here. For 2023, the median forecast is for a 4.6% funds rate. Again, a bit higher on the peak rate than where the market was, and that was from 3.8. For 2024, the median forecast is 3.9 from 3.4. 10 members do see a number below that 3.9 level. So if you want to think about the Federal Reserve cutting rates, that looks like it's going to happen sometime in 2024, getting back down to the new number we have for 2025, and that is 3.9%. A sharply lower GDP outlook, just 0.2% forecast for this year, down from 1.7, 1.2% for 2023, down from 1.7, and then gradually the Fed sees the economy, economic growth getting back towards the trend of 1.8%. A big but not tremendous increase in the unemployment rate outlook, 4.4 for 2023 from 3.9, so almost a percentage point or more higher than the low rate of 3.5, about a percentage point. Inflation nears the target of 2.3, not until 2024, hits the target of 2% in 2025. Going back to the statement, very much a cookie-cutter statement from the July wording, saying that modest growth in spending and production, it had said it was softening, now it sees modest growth, continues to see robust job gains and elevated inflation from supply-demand imbalances, higher food and energy, and broader price pressures as well. The committee remains on track for that $95 billion reduction in the balance sheet, and the decision was unanimous, with, I believe, the first time we've had 19 members of the Federal Reserve with a full Federal Reserve governor for maybe as almost a decade. Tyler, back to you.
Steve, thank you. Let's bring in the panel now. Bob Pisani from the New York Stock Exchange, Rick Santelli also joining us. And Rick, let's start with you and the move we're seeing in the bond market and stocks, which are reversing early gains. The S&P 500 now trading in negative territory, a 75 basis point rate hike.
Yes, I'm watching all the different maturities on the yield curve. And one thing I can tell you is right before the Fed announcement, rates were virtually unchanged. We're now up 13, 14 basis points on the session on a 2-year. The high yield on a 2-year now, 4.11, 4.11, 4.11, like we used to call information. And on the 10-year, the high yield thus far on this move, 3.62%. Fed fund futures, and there's so many contracts. I'm looking at the January. It dropped like a rock down towards 95.66. When its prices go down, the Fed presence goes up, but it's bouncing a little bit, and you are seeing yields very volatile, and I described the way they moved, but they are easing back just a bit. Of course, waiting for Q&A. Ultimately, another dynamic was prevalent right before the announcement. 30-year and 10-year yields were on top of each other. It actually inverted briefly. That's a very unusual inversion because 30s to 10s, known as the knob spread, since 2006 has only had 2 sessions, and they were both this year where they closed inverted. You want to pay attention there. And last but certainly not least, the dollar index, certainly the beneficiary of the path the Fed has taken.
All right, Rick Santelli, thank you.
So as you can see, Dow fell like almost 300 points. I saw negative 200. But now the Fed, Jerome Powell will be speaking. So we got to keep an eye on it. We've been through this before. So it looked like the market did not price in these 75 basis points, though we all knew it was about 90% going to be 75 basis points. The good thing is that he didn't go up 1 full percentile or 100 basis points. And it would have been absurd for him to go up only 50 with inflation running high. But we have a new problem, good people, and that's Putin. Putin is mobilizing troops, and he's talking very hawkish against the Ukraine. And now we have the geopolitical situation, of course, on the same day. That happened last night. And that's going to weigh. Energy affects the entire world, and it affects the market. All right. So as you can see, I have CNBC behind me. The Dow is fighting back at this point. It was down negative 270, and now it's down less than 100 points. So remember, good people, we know how this goes. The market is always green before the Fed talks, right? And then it goes negative, like I said in 2 days ago video. Now it could go positive and then negative again. I'm still risk off because I don't trust the market, especially with the geopolitical situation going on. This is going to be a 3-day event: Wednesday, Thursday, and Friday. Friday, the market could start green and tank red by the end of the day, especially the last half hour, right? Or vice versa. Anything is possible, right? So I'm risk off. I didn't do any trades. Let me know if you did. I'm just going to wait and listen and see what the market is telling me. I'm not assuming risk I don't have to assume, okay? So let's see what happens to the market as the Fed moves his mouth. Generally, when he moves his mouth, though the S&P and the Dow is fighting back, generally what happens as the Fed talks, the market tanks. The market, the market resents the Fed. He started raising interest rates too late. Now he has to be too aggressive. I just don't see a soft landing. We are in a recession. I've been saying that we're in a soft recession. And this is not fear. A hard recession is coming. But let's hope it's not Fed induced this year, right? We need to rip the Band-Aid off. I've been using that analogy quick. And the market is ready for it. And so are the investors. And just get it over with rather than a slow pull on the Band-Aid, filling the prick of every hair. All right, good people. So what we're going to do is just listen to the market. And I'll see you guys back. I'm heading back to LA and then lay over there overnight and then back to my studio. So hopefully we'll see you guys soon. Live, love, laugh, and learn. Make sure you check out the links below. You guys know what we're doing. We're just simply cashing up. Today, I'm just going to say Weeble, we're still doing our $5 a day. But in Moomoo, we are just simply cashing up. We're just not buying anything. We're just going to be cashing up because cash is king. There are going to be fire sales after all of this volatility has kind of subsided. All right. We'll talk to you guys.